Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day yesterday as we kicked off the week with style. For those of you new to the channel, do me a favor, click that subscribe button down below so you get the alerts and the updates as they become available. If you're not new to the channel, do me a favor, leave a comment down below. What is your favorite trading vehicle? What do you like to trade? Do you primarily like to trade futures? Do you primarily like to do options? Do you like to do forex? Let's just do a real quick poll. I'd like to see, what are people actually trading on the account. So go ahead and do that for me, and then leave a like, leave a comment, leave all that fun stuff. So let's go ahead and dive right in real quick. For those of you that participated in our live preview week last week, or if you're interested, we got a promo going on this week for our Traders Army subscribers. We'd love to have you join us for our premium subscription at the website, TradersArmy.com. Go there to learn more. But we've got a promo going on. It's promo code SUMMER50 because we know that the year's about halfway over. So we're going to give you 50% off your subscription for the next 3 months. So go to TradersArmy.com, sign up today using the promo code SUMMER50. So let's go ahead and dive right in. So today on the ES, we're up about 13 points, and we're getting some movement early this morning, and we are near the area where I said that we could potentially see some sort of a breakout occur, but this really just happened right at the European market open. So I'm going to wrap my lines around this area here in case we get a bit of a pullback, because that's the time of day that I like to see price move up. Now that one is moving up at a pretty decent clip, so I'm not sure that we're going to get a pullback all the way down into that region. Matter of fact, actually on the 15-minute charts, this level looks better coming back to here, right? So this would be a better level down here on the 15-minute if you want to be a little bit more conservative, right? And take a smaller zone. That's a fairly tight level there off the 15-minute chart for a potential reversal. Now, that's a speed candle. We do know that speed candles oftentimes tend to get retraced, and so that retracement could pull it back into that region. All in all, we are still seeing a little bit of bullish momentum to the upside, as there is, I guess it would be the expectation of lowering rates, of lowering the FOMC announcement, lowering the rates. And if it doesn't happen, I think we're going to sell off pretty good. I'd be more interested and more inclined to see, remember, for a breakout, I need 3 touches. For a truly good breakout, I need 3 touches. So I would be more interested to see a little bit of a pullback from this 2912 area and then basing before then breaking out. And so those are the 2 things that I'm kind of looking at for today. Looking at the NASDAQ. So yesterday, if you caught this NASDAQ long, leave me a comment down below. This NASDAQ long has worked out really, really well. We got a nice move off of this level in our NASDAQ position, and price is continuing to run. So if you caught this NASDAQ long, remember our 6 candle rule, 1, 2, 3, 4, 5, 6. So certainly it started to move after that 6th candle. So at the very least, I would take your stop and move it up underneath this last speed candle to lock in some profit. So hopefully you're able to catch that NASDAQ position and caught a little bit of a ride up on that one. Looks like we don't have any true resistance up until a bit higher, which is this area here on the 4-hour chart. The NASDAQ is still a bit below the S&P's, kind of potential breakout area, but it would be somewhere up in this region, expecting potential for a little bit of a pullback. Taking a look at crude oil. So in crude, we took a look at these 2 levels up here yesterday. Yesterday, when we looked at it, the market had pulled back down into this region. We rallied back up into there yesterday, and then we sold off from there pretty strong, and then we actually popped back up into there again and have sold off. So that level has acted as a resistance point. At this point, I've got to remove it because we traded all the way to the top of those 2 levels. So I need to remove that level at this point. When I look at it from a from a bigger picture perspective, we still see that I basically have this price action occurring, right, on the hourly chart. We're kind of looking at this price action. Now, these lower wicks tells me that buyers keep coming in right at this region, but eventually those buyers will peter out. And when those buyers peter out, you get a little bit of a move down. Now, the problem is I don't have a lot of room to roam because I've got a little bit of a demand here. But this demand here is a confirmation entry, primarily because this is a retest of this wick area down here, which is a retest of this area over here to the left. And that's why that level's a bit weaker. So keep an eye on this one. Today, you may get a little breakdown out of this level. In gold, so looking here at our gold trade, we had this little region right in here where I anticipated about a 15-minute. Let me zoom in on that a little bit. So this is the level I looked at yesterday. I said if you're more aggressive, there's this little 15-minute level in here for a potential trade. Price came through there, stopped us right out. Did not hold at all. But the level I liked much better was this one up here. This level up here being the more technically sound level. And now we hit it. And looking at it, just following our 6-candle structure, right? 1, 2, 3, 4, 5, 6. We actually did start to get a little bit of a move away after 6 candles. So you may or may not have moved your stop to break even. If you have not yet moved your stop to break even, now's the time to do so. Take that stop, move it to break even, because price isn't doing a whole lot at this point. So I think that that's really what the call would be on this trade. In that, we had this area here set itself up for a potential retracement. So keep an eye on this for a potential rally higher. Remembering that if you get into that, your stop has to go below the pivot. So give yourself enough wiggle room in there, getting that stop down below that pivot. All right. Next, in our bonds position. Now, we had talked yesterday about this little wick over wick area, and we got a little move out of that wick over wick area and then popped just kind of based along through that area. So not a whole lot of trading occurred around there from a breakout perspective. And then we popped huge in the overnight up above those highs. And so now our new higher swing high has been established, higher swing low. We are, our momentum was weakening pretty heavily on the 4-hour, and it's kind of continued back to the upside. So now if you're looking for an entry, very much like we had in the S&P, you've got that area here as a potential reversal point. Remembering it's found on a 15-minute chart. So anything found on 15-minute charts, we send to a purple picture, if you will. In the Aussie, just couldn't quite get filled on our Aussie trade. Thought this was a really nice level, but price has not come back up into that zone. Our 4-hour chart is very clear on our direction in the Aussie, and so we're getting a little bit of a rally now. And there's a chance that this rally will take us up to this region. Now, my problem with this area is the time of day that it was formed is pretty poor, pretty pathetic. So I've got to come a little higher to find, a quality level that was formed at a decent time of day, and that one would be up in here. So while this one's more obvious, this is probably a better level. I'm just not sure we're going to get there. If you notice, none of these areas of fair price value supply have been reestablished, right? We've not hit any of these levels. So I'll be interested to see if we can make it back up to that one. On the euro, we had the huge sell-off on the euro in the overnight hours. However, the talk about this was a potential for a breakdown. This is not a breakdown candidate. Leave me a comment down below as to why this is not a breakdown candidate. We had the line here, but this would not follow our rules for a breakdown trade. Leave a comment down below if you know why. Because it's not just looking at that it's not a breakdown candidate, but why is it not? And that's really the piece to look at. So now we've created a speed candle. Speed candles oftentimes tend to get retraced, and so that would be this area right up in here for some sort of a retracement on that speed candle. In the Canadian dollar, very similar price action that we just talked about to the euro. So I'm going to highlight this area here. Now, if you take the Canadian, your stop has to go up above this level here. I will say I like this level better in the Canadian than I do this lower one down here. This level up here, this little wick over wick area here, to me is better. So I'm actually going to remove this one. I already got one close to that in the euro, so I'm going to leave this one up here in the Canadian dollar. Last but certainly not least is our Great British Pound and the Japanese Yen. The British Pound continuing to sell off as well. Unfortunately, we're unable to get into our very clean area of supply in this one. And so now we've started just chopping along sideways. I'm going to wrap my lines around this area here, which was formed yesterday at the European market's close and the U.S. market open, kind of in that range. Not sure we're going to make it up to there. We may have a better opportunity for a breakdown, so look for a potential breakdown in here. Japanese yen, we set up a little area here for a potential of a reversal, and then price just kind of meh, but it's using it as a little bit of a demand area. So this could be a good shot for a candle-to-candle trade and taking that reversal back to the upside, being used as a bit of a demand area. We had all these wicks trading up, but now we've put in a couple of dojis in here trading down. So I think that your next candle-to-candle opportunity could be to take this thing long up to that next zone. So we have a fair amount of movements, some things that occurred in the overnight hours that gave us some thrust up in the markets. But just remember that those speed candles tend to get retraced, and so we want to be just aware of where those are on the chart. So if you have any questions, please send us an email, support@tradersarmy.com. Thanks so much for coming by today. I hope you have an amazing Tuesday, and it's a kickoff to a great week. So we'll talk to you real soon.